going to jump right into it because it's been a very long time and there's a lot of crazy things happening in the stock market. Before we kind of jump into, I know we came here because it's that time of year when we do your small account challenge, which is always a joy to watch and always a joy to witness. Before we jump into that, I kind of want to pick your brain on the market's been seeing a lot of red, and so much that like it's someone that's like a long-term investor is kind of like nervous. So where are you seeing the market at? Like, kind of just like insight, like why is it dropping? What could it be? Like, are we seeing a red future for the next 18 months? Things like that. Like, is the market leveling itself out? Like, I'm just curious to hear your opinion on it.
Mm-hmm. Well, the big thing at this moment is just still trying to fight inflation. That's the number one thing. We all have heard about inflation. We all know, again, inflation's the talk of the town. And all it is the feds, the Federal Reserve, the Speaker of the Federal Reserve, Jerome Powell. He comes out usually every 2 months and raises interest rates. And as we raise interest rates, the whole point of that is to make things more expensive. For instance, if you want to take out a mortgage for a loan, it is going to be more expensive to pay back over time. When you, again, use your credit card and you're late on some sort of payment, those interest rates are going to be more expensive. If you want to take out a loan for a car, that's going to be more expensive. So when we raise interest rates, it's supposed to make people slow down their spending, which is going to bring down inflation. Now, so far on the year, we've had a 0.25% raise. We've had a 0.5% raise. We had 0.75, and we just had another 0.75. And now as we move over into November, we're going to see, are we about to have another 0.75? Now, the expectations are going to be 0.5% at this moment. We weren't even expecting having 3.75 interest rates raised. And if we have another one, it all depends on October 13th. October 13th is going to be our CPI data, and that's going to essentially be the inflation report on the prior month. So the reason why the stock market crashed so hard in September was actually two different reasons. Number one, Jerome Powell at Wyoming at the Jackson Hole meeting, he stated that they're going to use all the tools they can to fight inflation in an aggressive manner. Now that automatically is going to make investors nervous. That's going to make them fearful. You need to think about it as investors. They always have a lot of emotions. The more fear we have, the more cautious we have, the more cautious we are, which means we don't want to be putting our money out there. The more excited we are, the more confident we are, is going to be easier to let that money into the market. It's just, human psychology. When you're scared and you don't know what's about to happen, you want to hold on to your money. But when you say, hey, yeah, take my money, everyone else is making money, you could see how the stock market rises extremely quickly. So if we have the Speaker of the Federal Reserve, who is in charge of, essentially, if you want to think about it, in charge of the money in the United States, says we are going to get aggressive to bring down inflation, it's going to make Wall Street, it's going to make the stock market definitely have a pullback. Then we saw our August CPI data. It was nowhere as good as what investors wanted. Investors wanted to see that inflation was falling, that inflation was dropping. And once we got that data come on out and it was nowhere near what was expected, everyone now was saying, hey, we're going to be seeing 0.75 interest rates be raised. About 2 weeks later, we had 0.75 interest rates raised, and now the stock market is currently hitting brand new 52-week lows. We are down 25% on the year in 2022.
Scary.
Yeah, 25% down on this year. And we need to remember, you can go to Google if you want to and just type in what is the average pullback in a bear market. Stick to the numbers. Don't try to time the market bounce. But the average is going to be a 35% drop. So we're 10% away from the last 100 years of bear markets. A 35% drop is what the majority of people are going to be watching. Through the Great Depression, through, again, 2008, through the dot-com bubble, through past interest rates being raised, we want to be looking around that 35% area. So what I suggest a lot of traders start doing is right when we get towards around 28 to 29%. Start again putting a little bit of money into the market. You want to be safe? Put it right into the S&P 500. That's an index. It's going to be the top 500 companies in the United States. The best thing about investing in the S&P 500 is over time, throughout history, it has never lost. Yes, we have corrections. Yes, we have recessions. Yes, we have depressions. But every single, I would say 5, 10, 20 years, you will see that it rises over time because all the S&P 500 is a basket of the best plays. It's not like you're just investing in one stock, and if that stock fails, you lose all your money. You're investing in the top 500 companies. And you know what? The top 500 companies, the majority of them are going to be able to be productive. They're going to be able to pay out. So what I would do as an investor investor is start saying, hey, once we get down to around 28, 29%, let me start putting some money in on this basket. Then we start getting towards around 33%. Let's put a little bit more money into it. Now we're at 35%. We put a little bit more money into it. And we're essentially averaging in to get the best position possible. Now, if we ever get underneath, or I would say below that 35% mark, where we're down 37%, 40%, places where people are saying maybe we could get to, that's where you want to put your biggest investments, because stock trading is almost a game of opposites. The majority of people, and you probably have heard this before, 80% of investors fail. 80% of investors lose money because it goes against our human psychology. When we see everyone losing, we don't want to put money into the market. It makes no sense, as in a broad spectrum. You're losing in the market, why would I put money into it? But you need to think about it as this is the discount price. Let's think about your favorite clothing brand. If your favorite clothing brand is Hollister, Limited 2, anything that you guys want, right? Apartment 9, I like to wear those t-shirts.
APT, baby.
Oh, yeah.
That.
Oh, yeah.
Hell yeah.
So
Sponsor deck.
So the thing, yeah, I need a sponsorship. So the thing is, if I walk past, let's say, Hollister, and all of a sudden that was my favorite, clothing brand, I guess like in 8th grade, and I see 30% off all t-shirts, I'm going to walk in there and I'm going to buy some t-shirts. I love, again, these clothes. I want to wear them and they're the cheapest. Would I walk past and see 30% off and say to myself, oh man, I'm scared to go, bring the prices back on up, then I'll buy. And it's like, why? The stock market is giving us a discount. It will come back at some point. I'm not going to sit here and say, oh, it's going to spike back on up right when it hits 35%. I'm not a fortune teller. But what I can tell you is from what we have seen in the past, what we have through our history. And if a 35% drop presents itself, I'm going to take advantage of it and I'm going to start averaging in at these areas. So as of now, being down around 24, 25%, I don't have my big long-term investment money in on the stock market at this moment. I'm still just day trading, but that's what I'm watching out for. And I will slowly average in because I don't want to time the market, but I do want to get the best average price I can when that does present itself.
You have a sweet spot where you're just going to go all out?
Oh, I got a sweet spot.
I had to ask. No, that's a lot of good insight. Because dude, it's frightening, man. Like even people out there that have 401k, those of you that listen to our podcast in the past know that for the past couple months, I've been like on the flip side of a 401k. I don't see the value in them anymore. So when you see those 401ks and they start dropping, right? Like, cause they've only been around for 40, 50 plus years or whatever it is. And it's like, now we're starting to see the repercussions of what happens to those people that were first, sold on the American dream of a 401k. And now they're trying to take their money out and they kind of can't because everything is correcting itself. It's just this weird place that we're in. So, I don't know. I've been taking what you've been saying into consideration and I don't want to say stockpiling on cash, right? But putting money aside so that I have a sweet spot. I have that 28, 29%, nowhere near to the extent that you're doing it, but ideally, like once it hits that 28%.
That's what it is.
Yeah, I have a fair share of shares and stocks. I'm like, I'm gonna put it in on you. Hopefully, knock on wood, see where it goes from there.
That's what I'm saying. The smartest thing to do is put your money in safe bets. You don't need to pick something crazy and random. You don't need to go for the lottery ticket. Go for safe bets such as just the S&P 500, especially if you want to hold something for long term. If you are someone that's listening to this right now and you're saying, hey, I don't know much about the stock market, go with an index fund. An index fund such as the S&P 500 or again, Vanguard's index fund, which is VOO, they're going to be able to produce over time. Don't just say, okay, I'm going to buy DraftKings or okay, I'm going to go ahead and buy Nvidia or I'm going to buy Tesla. Sure, these companies can produce, but put something that is going to be a kind of surefire thing where we know it's going to produce from its past, from its future, from every standpoint, it's a smart investment.
Yeah, I was going to, just to piggyback off that, not that I'm this guru, but like the idea of like a brand or a company that like it's too big to fail, like something like Coca-Cola. Like you're not taking Coca-Cola out. Like sure, they might have negatives here and there, but that's something that's going to be around for my lifetime, my children's lifetime. That like that's just going to be around forever because that's just the company that's built. So that idea of like just put your money, it's safe money, right? Like it's you're not going to see I think everybody on TikTok these days are more like, oh, I heard this ticker that was in this Discord and they've been around for 6 months. It could be the next big thing. It's like, well, sure, take the gamble on it, but if you're not in, like there's certain risks you should take. Just have an educated risk.
Yeah.
And again, like we won't jump too much into it. I'm really more curious about the small account challenge that you're doing. You do how many of these a year? 2?
No, I usually one every fall.
Really? I thought you do one at the beginning of the year and then you do one towards the end of the year. Sorry if I'm.
Usually we do it towards the fall, and sometimes it carries over
Okay, that's
into
probably
the
what it
beginning.
carries. We should start doing them 2 times a year. You guys heard it here first. We're going to get them to do it 2 times a year.
Oh, there's going to be outcries now if I don't do it.
But no, so like every year you do this small account challenge, and I've seen you grow it from 2,000 to 100,000, 5,000 to 100,000, so on and so forth. So what makes this small account challenge different than the ones you've done in the past? Like, you know, in the past you've done, I think you've done some sort of swing trading with it. You've definitely done day trading. I don't think I've ever seen you hold a stock from longer than 3 days when you're doing the small account challenge. So what's going to make this one separate itself from the rest of them?
Well, first thing, I want to be transparent and just get out of the way. First, I've done 6 of these so far. 6 of them, 4 of them, I've been able to have massive success. I've been able to do around 2,300, first account ever, all the way to $100,000 plus. Following year, we were able to do 4,000 up towards around 75,000. Then I believe the third one was a DNF, did not finish. And it's not that I blew up the account. I just couldn't really get it going the way I wanted to.
DNF, did you create that?
DNF did not finish? No. You ever heard that term before?
I've never heard of that. No, I'm going to put that in the memory bank. DNF, did not finish.
And then the following year, we did 5,000 up towards around 45,000. Another again, 5,000 up towards around 50,000. And then another DNF where I just couldn't get it off, you know, that starting line. And that's usually the hardest point of stock trading. And that's why I like to do the small account challenge. And so the thing is, the small account challenge, I put everything I possibly can into it. And we have an amazing success rate with these small account challenges. And as you can tell, as I'm speaking, the most important thing to get an account growing is to get off the starting line. If you can turn $5,000 into $10,000, you are already on a great pace. Really, the magic number is to get above 25K. Once you get above 25,000, you're above the PDT rule. You can trade nonstop, funds settle right away, and that's when you're gonna have the best chance of success. So I know you sit back and you say, okay, I wanna turn $2,000 into 100,000. That's great, but the thing is, that's the main goal. The only way to reach that main goal is to have sub goals to actually get there. So I like playing golf a lot of times. And a great, score in golf would be if you shoot underneath a 75. I'll step on the course and say, I want to shoot underneath a 75 today. But I need to think about that as one shot at a time. I need to go into every single morning and say, let me get one trade at a time. Let me turn again $2,000 today into $2,400. Let me turn again $5,000 today into again $5,700. And that's going to compound over time. The biggest mistake I think traders do is they again start with a small account and have such big goals that it's great to have goals, don't get me wrong, but I think it overwhelms them. And when they only make $200 in a day, they kind of feel like, oh, wow, I'm not making as much as I should. You need to think about how much money you're actually making on a small account. So on a normal long-term investor, how much do you think someone wants to make throughout 365 days?
I would say I'd probably the sweet spot 125. I'd say 125,000.
I mean, the percentage-wise, do you know?
Oh, Jesus, sorry. No, I don't know the percentage-wise, no.
So usually a long-term investor is going to be looking to get a return anywhere between 10 to 15%. That's what a long-term investor would like out of their long-term investment throughout a year.
Gotcha, okay.
So if someone puts in, let's say, $100,000, it would be nice at the end of the year if they have, let's say, an extra $15,000. Now their account's at $115,000. They didn't do anything. It's all passive income.
Next year that compiles, so
and
on
it just
and
keeps
so
going
forth.
bigger and bigger and bigger. So when you hear, these hedge funds and Wall Street and all these, huge brokerages, they put in X amount of money. I'm talking about $100 million. You put in so much money, of course, it's easy to be able to make, let's say, $15 million because you put in so much. So a lot of times on Twitter, a lot of times on StockTwits, a lot of times on TikTok, you see these huge traders making these massive gains. And just like myself, I'll be able to have a $30,000, $50,000 day, but that's because I'm also putting in $300,000. And I feel like a lot of traders, especially new traders, love seeing that. But when they don't have the same results, they get confused and they automatically put themselves down. They say to themselves, oh, I only made $50 today. I only made, again, $200 today. Sometimes traders don't even realize that they're trading better than me. And what I mean by that is if you have a $2,000 account and you end up making, let's say, $500 on that account, That's insane. The percentage return that you just did is going to be better than someone else, that has a $300,000 account. Imagine getting a return of 20% on your investment in a day. People are trying to get 10% throughout the entire year. You're doing 20% in a day. And that's
Wow.
what's, a lot of traders need to think about. And they got to say to themselves right now, okay, I have $1,000 account. What's an actual realistic return that I can get per day? And honestly, if you have $1,000 account, if you have $100, $150, $200, a 20%, you're trading better than me if I have a $100,000 account and I end up making, let's say, only $4,000. You actually traded better than me, but it's just because I have a bigger account that I'm able to, again, see a $4,000 profit. So the first thing that traders need to understand is how much money is realistic for their actual investment for a day trade. So if for me, starting with the small account challenge, I'm going to be starting with about $10,000. Now, I'm starting with $10,000.
Sorry for cutting you off. Just day trading stocks, or you throwing in options? Or you throwing
Well, that's going to be one of the most important things here. This small account challenge is only options. This is the first time I've ever done this. First time I've ever done this in my life. I just started trading options 2.5 months ago.
It's glorious.
And within this 2.5 months, I was able to make over $80,000 just trading options. I'll be honest, I fell in love. It was like the first time I ever kissed a girl. First time I ever kissed. It was like sophomore year of college. First time I ever kissing someone, So
absolutely.
Yeah. So the thing is, I absolutely love trading options now. And the thing is about option trading, which is just such a great pro for anyone who does not know. When you're on a small account and you are just buying shares, one of the biggest issues that traders have is they're underneath the PDT rule. PDT rule, you're only essentially going to be able to get 3 trades throughout the entire week.
What does that stand for?
Pattern day trader.
Pattern day trader. Okay. And you get flagged essentially where it's like you don't have enough of funds in there to be settled, so on and so forth. You're only 3 trades a week.
Exactly.
Okay.
And that's so you can't trade nonstop. Now, what a lot of people don't know is with option trading, if you're not on a margin account, you use a cash account, you don't have a PDT rule. There will be of course, if you're on a margin, it's PDT. But if you're on a cash account, you can trade all the money in your account that day, and then it will settle overnight and you can trade it all again the next day. And it'll settle overnight and you can trade it all again the next day. You can trade on an options cash account every single day as it settles every single night. Because there's a lot of people who automatically start trading shares and they say to themselves, oh, I don't have enough day trades. Oh, I can't do this. I can't do that. So trading options, that's one of the most glorious things about doing it with a small account. What I also love about options is the fact that we are buying contracts. We are not buying shares. So we don't have to just stick with microcap plays where stocks are only 50 cents. The stocks are only $1. Stocks are only $4. Let's just be upfront. I know it. You know it. Traders that are listening to this know this. A lot of times when someone is, let's say, a leader of a group or a Discord or whatever, and someone says, okay, I'm buying this. Mm-hmm. What happens to this play?
Pump. It's a pump and dump.
It turns into a pump a lot of times. And I don't ever want to pump plays in any sort of way. I don't want traders to, again, get caught up in a pump. And that's why I enjoy trading options as well. Because when I trade Apple and I say, hey guys, this is my alert over on Apple. I'm telling you my reasoning. I'm telling you my credibility and why I want to get involved in it. If I buy Apple, 100 people buy Apple, even 1,000 people buy Apple. You know what Apple does? It goes, eek. You know why? Because it's a $1 billion company. You can't pump and dump it. So the best thing about doing options and especially doing the small account challenge is that we can actually be able to get in on these blue chip plays all at the same area. All be able to have credibility, get in at the same price, and it's not going to have any manipulation behind it whatsoever because we're talking about $1 billion companies that are not going to move from, again, our little tiny investments on our small accounts. And the best thing about it is we can make money quicker. So how I like to think about options for those who do not know is shares. Shares mean we own the part of the company. We have shares in the company. Now, this would be the same exact thing. Let's say if you go out and you buy a Lamborghini. If you go out and buy a Lamborghini, it's going to cost you about $250,000, let's just say. Now, I can also lease a Lamborghini. If I want to lease a Lamborghini, I still get to drive the Lamborghini. I still get to keep it in my house. I still get to do this. I still get to do that. But it's only going to cost me maybe over time $40,000. So guess what? I have the perks of being able to drive and essentially be able to own a Lamborghini for a shortened period of time without having to pay $250,000. So the thing is, contracts are almost the same exact way, if that's an analogy to help you understand. I am, again, temporarily owning shares of that contract. I'm basically leasing shares of, again, the stock. And that's going to, again, help me be able to make money. I'm going to be able to grow my account. And then when my contract expires, the expiration date, I can sell my contracts away and I get to keep the profit. So again, options really aren't that complicated. I know a lot of people get confused and overwhelmed by options. And I do think it's so important to start with shares because options is a crazy game. Options, even me started trading options a few weeks ago. I was absolutely blown away on how much money you can make. It is insane. And I've been trading with $10,000 over the last few weeks now. And even with $10,000, I'm confident enough to say during the small account, I'm looking to make anywhere between $800 up towards around $1,400 per day with just, again, a $10,000 account. That means if we reach our goals that we want to reach, I want to be able to start on off October 17th. And by November, I want to be able to have 10,000 up towards around 15,000. By the end of November, I want to be surpassing the $25,000 mark by far. As we come into 2023, I want this above 50,000. So that's, again, the whole challenge right here. We're starting October 17th. I'm starting with $10,000. I'm live streaming every single play. We're trading options. I want to be able to, again, show you what I'm trading live in real time, give my credibility, give my alerts, teach you why I'm doing it. And then I want every single person's account to look just like mine. I don't find it successful if I'm, let's say, the mentor, I'm the guru, and I'm the only one being successful. Mm-hmm. And that's what I feel like is a lot of the problems with if you have ever tried to follow someone before. I hate that. I don't want anyone to follow me because I feel like a lot of times when you're trading penny stocks, I feel like a lot of time when you're trading these micro caps, these low floats, have you ever tried to follow someone and it seems like they always have a better entry, they sell when they're making money, and now you're caught up and now, again, you're not making any sort of money whatsoever? We are, again, doing it together. This is not going to be successful to me unless I see every single person's account relatively right where my account's at. I want to end the small account challenge up above 50, up above 60, and be able to talk to our members and say, who else is above 50, 60, and see the entire chat say, me, 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 me. Even if one person says, I blew up my account, I lost it. That's not successful to me because why? There's a reason behind it. I'm doing that. I don't need to do a small account. I know I can make money. I'm doing this solely to help out members, help out the person that says, I don't know where to begin. When I first started trading, I got involved with $2,300 and I was completely lost. No idea where to start, no idea what to do, no idea how to trade. If I had one person that just said, hey, I'm going to live stream everything in real time, tell you what I'm going to be buying. I can't tell you what to buy, but I will show you exactly what I'm going to be buying, give you my credible reason behind it, and we can all get in these plays at relatively the same areas. And of course, it's not any sort of pump and dump because it's $1 billion stock. I want to be able to walk you through step by step and show you how to be successful. How would I grow a small account in 2022? That's exactly what we're going to be doing starting October 17th.
So it's not just for advanced people. This is for people that are essentially trying to get into it at a low amount of money, whether it be the 2,300, whether it be 10,000, or even these advanced people that are like, let's really put some bread and butter in this thing. Let's see how much we can do. So it's for new and old traders. And when I say old, I'm not talking about elderly. I'm talking about people that have been in the game for 5, 6, 7 years.
Yeah, I mean, old people can do it as well.
Old people can do it too, right? We're not going to be prejudiced against old people. No, man, it's always cool. It's always inspiring to see the stuff that you do, especially for your community. I mean, that pretty much covers everything in regards to the small account challenge. One thing that I've been seeing a lot, and people have been actually, for some reason, DMing me about, like because of the conference that you had in Florida. Any sneak peeks on next year? Perhaps something may or may not be happening for a Deckmar Trades Tradecaster conference.
We
don't have to give too much away, but I'm just curious. I'm always
curious. We're thinking about a little place that's warm.
Called Vale?
A little place that beer flows like wine. A little place where women flock. A little place, I'm talking about Aspen. No, Las Vegas.
Really?
Yeah.
That would be a fun time.
Yeah, so we hit the East Coast, did the Florida one, and it was absolutely great. Loved it. And now, again, we're going to do help out the West Coast traders. So we're thinking probably May, April of next year. We'll head on over to Las Vegas and have the seminar over there.
Wow, you heard it here, guys. Vegas. Just send me an invite. I'll come. I'll pay to go. Who cares?
All right. You heard it here first, guys.
Absolutely.
Ralph is paying for everyone.
Well, I don't know about that one, but who knows? Maybe we'll do some sort of giveaway. Podcast room will help Deckmar trade one of his followers. We'll figure something out. But dude, any last things before we cut it short here? I know we're pushing close to the hour, but Always a pleasure having you here. Any last minute things, any last things for your traders out there? If they wanted to find you, actually, let's do that. For new people coming across this, whether it be on YouTube, whether it be on TikTok, how can they get in contact with you? How can they find out more information about signing up for TradeCaster, Deckmore Trades, the whole trading thing? What can they do?
Yeah, I mean, everything that I'm going to be doing, it's all going to be on tradecaster.com. Every single person that does want to join the challenge, just go over to tradecaster.com. You can sign up. It's a free 7-day pass. You don't get charged anything whatsoever for your entire full week. So if you aren't loving what you're seeing, of course, you can be able to cancel with no charge whatsoever. But I really do want to put out that message. If you are a person that is struggling, if you have been underneath $25,000 for X amount of time, weeks, months, years, this is what you want to be in. I'm telling you right now, if you are a person who has not been able to grow an account and you're sitting there and you're fumbling your fingers over, again, a Robinhood app, and you're just guessing randomly, I want to be the mentor. I want to be the person. I want to be the trader to you that you can look back and say, Sean, help me. That's all it is. My goal is to see you get above that PDT rule, see you get above 50,000, and I don't feel success until I see you above that. So we are doing everything we can. We got 3 months to make it happen. That's again the time frame of this: 10,000 to 25, 25 up to 50, and then from there, let's just keep rocking and rolling, see how high we can get this. But we are going to make it happen before December 31st, before we head into the new year. So the challenge is on, and I cannot wait to get started.
Hell yeah, dude! Thanks so much for coming.
Of course, buddy.